Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Good afternoon, guys. Thanks for everyone for coming today. We're going to focus on alternative finance funding today. So I know we talked a lot about bank funding yesterday, and a lot of business owners don't always realize that there is a lot of other options out there. And I think one of the stats we had yesterday was 50% of businesses decide to stop funding. The bank says no to them. So I'm really glad we have such a fantastic panel of diverse alternative finance funders that can help business owners understand what else exists on the market. And so I'm going to let my fellow panelists introduce themselves, but we have some great representation. Scott from Iwaka, we've got Justin from Trade, and we've got Gotchi from Triber. So guys, maybe Gotchi, if you want to start, introduce yourself and give us a little bit of information about Triber as well.
Sure. Hi everybody, I'm Gotchi Altman. I'm the Chief Commercial Officer for Triber. My background is in financial services, so I did the Barclays, Vitor, Capital One. What we do is we do cash flow financing with small businesses, for small businesses, and today our basic product focus is this mortgage-based cash flow financing product, sharing resource B2B business.
And
Justin, Chief Credit Officer at Trade. We were started around 5 years ago now, really with a mission of trying to unlock growth for a lot of SMEs, younger businesses, growing businesses. Looked at the market and saw that people with issues raising the kind of funding they needed to. So there is stop finance, purchase orders, all those sorts of things, which wasn't many markets. So we established a set of products around that. So we started originally, the headquarters in stock. 30 to 10 represented UK. It's now by far our biggest partners, but across sort of Nordics, UK and Ireland as well. Here about $500 million advanced, press 1,000 customers, so going to positive partners. Yeah, excited view today. Hopefully give some ideas about how businesses run businesses, entrepreneurs just like yourselves, can access the kind of funding that you need.
Awesome. Hey everyone, so I'm Scott. I have been an entrepreneur before. That's how I got into this area of a failed business. And then after that, I moved into the equity world and did equity crowdfunding for about 7 years. And now I am working as head of BD sales at Iwaka, which is an alternative lender. So I've devoted the best part of every single second since I left university to business funding. Hopefully have a diverse view, a little bit about Iwaka we've done. This year we funded about 100 naira businesses, about almost $1 billion. This year, 4.5 billion in total. So it's really taken off in the last 2-3 years after the pandemic as well. And hopefully, there's a reason I moved from equity to alternative lending. And hopefully I can give a bit of insight about what. Awesome. Well, I might just dig straight into that, Scott. So I touched on in the introduction just how many business owners stop when the bank says no. Like that crazy stat of 50%. So you've obviously had a load of experience either as a founder yourself, working in equity and now alternative finance. What is it the banks miss, and why do you think there's so much opportunity for alternative finance? What are they seeing in business owners the banks are missing?
I mean, bluntly, banks have got two problems. One, that they are often quite risk averse. And this is, I'm sure you will agree, with SMEs, a bit more riskier parts of the market that's harder to get right. And the second is they're just quite big and slow. So when entrepreneurs have new needs that have really popped up in the last 15 years, they're just not very good at servicing them. Just small things about, the proliferation of information online and AI being able to understand your credit file, something that just didn't exist 15 years ago when you needed 6 weeks for somebody to look over bank documentation, and they just haven't caught up. I'll say, let me allow me to say this because I was thinking this on the way here, which I thought was a really positive thing to say, is that I genuinely think the growth in alternative finance, which you guys are a part of as well, and part of the UK, is one of the biggest success stories in the UK economy. Part of the reason I'm in here is that genuinely you're sitting in a market which is leading in the world for this. Like the deregulation that happened in the market that enabled businesses like ours to exist has just afforded so much opportunity to entrepreneurs to raise money. And in a world of a little bit of doodle-boo in the use of that, I just think that's a nice thing to say genuinely that I thought of. And yeah, it's because we are a little more agile and the banks are at understanding who the right kind of people to lend to are.
Just going to go for you, kind of similar kind of question, but I suppose where were you seeing the opportunities as kind of chief risk officer when it came to linking through the trade product vis-a-vis why someone would come to you as opposed to taking a traditional bank funding options?
Yeah, I mean, I want to start out and say, actually, banks, I think, do a reasonably good job in this space. They just actually are pretty compatible for a lot of the space. It's a very big sector. So if you want a commercial mortgage or whatever, rates the problem, the bank is just down there, that's basically how it goes. But yes, a lot of business from both already for property, or if they've got money to put somewhere, they're pretty deep to new business. So for their operations, it's the sweet. They have a low risk right far. He's a deposit to the man that get these. So within what banks have, they have a reasonable friend of us, but we operate separate to that, and with a very good perspective, we want across all to fund this. Yes. I think we have the ability to understand businesses a lot more, how they work, specialized teams. The banks do in some way, but again, really always looking for a proper security part of it. So it's all by the same special. We're really fun to understand businesses. Be athletic about how they grow, have lots of businesses that come to us with solid established operations, and sort of one that's been better than well. And the comments I have, but the purchase order from the good buyer. Now I need to triple my size every March. And there's no way a bank is ever going to say yes to that. It's just wait up. There's someone like Trade, probably other lenders as well, give services space, being think about digesting approach, take a chance a little bit. Value is a really key driver here. So a lot of people here will turn finances see cost, very big stuff, especially in the press on the tables. Turning values are expensive. Reality is we are more expensive in the bank for a very good reason. You get the loss. Because if you're a business owner and you look for success, see these guys, the value proposition is there. But in growing my business, I don't begin as a little bit more expensive. And because I still get involved on value. Who has the other specialists, of course, exactly the same competition. That valuations are low, but the chances are to grow now. They've got an valuation or on zero organics. Always better to out now. So keep about values for yes. These key things I think across the two in today's is we bring specialization, the value proposition, and speed for sure, and understanding.
Okay, gosh, one area I was pretty keen to dig into, because I know you guys absolutely pride yourself in this area, is around speed. So one of the main frustrations business owners have when accessing finance is the time sometimes it takes to get to a decision, because small businesses can be so volatile, seasonal, that time is super precious. So I know one of the great things about alternative finance tends to be about speed, but how you thought about that, building infrastructure to be able to be reactive to business owners, to one with their timelines?
Sure, and I'll comment on the previous question a little bit as well, and it kind of ties into this. I think until the last 5-10 years, why alternative lending couldn't grow as much was we didn't have as much the same access to data the big banks have, because all the bank accounts have been sitting with the banks as they see the transactions. But today with open banking, we're able to access that. So with open banking, credit reference agencies, and so there's a lot of data available. So what we achieved to do, that was the aim from the beginning, to be able to do straight through decisioning for all small businesses, which means in about 5 minutes we can open a limit for our customers, and in about 2 minutes they can draw down first funds by submitting their invoices. There is no paper, so we won't ask for paper, we won't ask for personal guarantees or any ventures on the account, and we need a lot of the pieces that slow down the process to enable this. And how do we do this? So using all the data, we are able to assess the risk and manage it with the decision levels in the background. This is also one of the reasons why banks can provide it, because their service model is very granular and very costly. And as small businesses, they're not all one size fits all. So they that underwriters and processors in the risk averse, so you have the one guarantees, ventures, so these take time, and this also costs the banks time. Hence, a out of license diseases. When you look at, for example, overdraft, so cash, what is the ideal product for cash flow finance for small business? The massive like overdraft line, right? But in the last 10 years, it shrunk 40% in the market. So what is available for small? It's not because they don't need it, they can't access.
Thanks so much for that. What would be good to kind of get from all you guys, so that business owners can kind of see and understand, is these products right? So to me as a business owner, what are the kind of the typical customers that you see coming through, and are you attracting the exact customer that you want, or do you feel there are other customers out there you still think are great for your product but they may not necessarily have heard of it, and maybe why to that? So Scott, I don't know if you want to kick us off.
I mean, what I would say first about iWalker is we're deliberately a service that fits everyone. It's interesting that Roger mentioned the larger credit facility or larger overdraft as an ideal product. That's kind of what we're trying to build, albeit within the regulatory environment of not quite being able to call it that. But it kind of works the same way. So in terms of our ideal customer, honestly, we are very happy to deal, because we're quite a tech-focused business, very happy to deal with people wanting 1 to 5K and building their credit file with us to get more and more funding when they need it. We're very happy to deal with people that need the cash pretty quickly for something unexpected that's happened to the business that they know that they can cover. And then I think the other thing is we've just extended in the last year and a half our top amount that we lend from 250k to $1 million. Now I'm not breaking news here, but I would not be surprised if we went even higher than that, because ultimately it's about offering to the entire market with a product that kind of grows with the business. So it's cliche for me to say like everyone, but it kind of is, but for specific reasons, because our product's so deliberately flexible.
Just I'm kind of curious from your point of view, because it's more focused in a certain area. Can you talk a little bit in terms of that ideal customer type for you, and how do you find? Are you still going through an education phase with those types of customers, or is it fairly well understood your product offering?
Yeah, I mean, our product is really, as I said at the first, our mission really is built around scaling businesses, and where the main handbrake is, best for a lot of people, is buying goods in advance, having stock on hand to sell. So it's more tied to visible products. And we're quite open with that. The businesses we deal with in size have facilities to go price walk up to way over 2 million pounds. I think the key issue really to penetrate the market for us is visibility. And I think we're in an environment where we have quite a number of good operators. 3 are on stage right now. And they have a superior product. So I think people look a lot of time to think, how do alternative lenders get into a bank-dominated world? And in my mind, that this actually a narrative should be flipped. How do banks fit into an alternative lender-dominated world? Really, for SMEs, these products on the stage here are much better than most bank products. So yeah, I think visibility is the key issue. What the government does about that is a key part. I think we talk a lot about sponsoring SME lending, all these entities, and it's not going to be bad. We've got 2 major banks recently withdrawing these places in the market. We had Lloyd's and the factoring arrangements. That's a lot of businesses. We had Starling, self-style Django, the SMEs. They're mulling out of this. And mind-boggling, want to look around the market and see what banks do. I think the evidence is quite there. Want to look what alternative lenders are doing. The evidence is also there. Visibility is the key issue. How do customers know about us? How do customers find us? Why don't they come to us first? We're all small places trying to compete, I suppose, with like supermarkets dominated by Tesco's and Sainsbury's and whatever. We're in a local grocery maybe has a better products, better price, or friendly sales, all those sorts of things. Hard for them to compete, but this is the world we live where we need to get that visibility a bit higher to make sure we can actually get those products needed to customers.
And same question to you, Bate, just again, just curious, what is your ideal customer type? And again, do you have any issues educating them around it? How are you finding kind of getting out to market to those businesses?
So our product has been in the market for the last 2 years. We were founded about 3 years ago, so we have one product at the moment. In terms of the customers we serve, it's basically any B2B trading business that has more than 100,000 turnover. And when I go looking at businesses who've been trading for about 2 years, so those have been some kind of like history. And B2B trading, meaning if businesses should be invoices other businesses and they get paid verified terms, what we do is we get them paid now, like instantly. And in terms of our kind of customer base, it's basically 400,000 up to whatever. Our limits so far had been at 50. We just 400 by the years to be a million. So it's growing quite rapidly. Once you get to those levels, that to be attractive by the entrepreneurs. I think the challenge is the same. It's a business that we market for 2 years, the visibility, recognition. So that's why how we go to market work with brokers, aggregators, or we work in strategic partnerships. So we have this vision of finance. For example, in our products is you can connect your accounting software and like all the voices are already there. You can see which ones you can draw down already, like with a plate. So actually, embedded finance can reach the customers of established businesses who all have a relationship and brand awareness, and they kind of trust factors. So, and our own, I know your direct marketing is unique business in our previous business for one set of businesses.
So one thing we've touched on just is the flexibility alternative finance offer, but also the speed at which business owners can access these products. So I don't want to flip it on its head slightly in that hopefully business owners are discovering these products very, very quickly, and then when they do discover them, it's a lot easier to access that. But I suppose it's important for business owners to understand the other side of it. Just you touched on it, naturally with alternative finance, there are increases in rates that differ from great profile to a bank. So how do you think business owners should think about accessing alternative finance in their own businesses before clicking that button, which is easier than ever to click, I suppose. So I'm kind of curious to hear how all of you guys should think what you would say to business owners who might think they are considering your products. What do you think?
Yeah, I mean, I was maybe a bit harsh to banks earlier on. I said they were slow, but there is a scenario where they're fantastic, which is if you know you need a certain amount of money for a very defined period of time, typically a year, 5 years, and you know you're going to be able to pay back because you've got very good P&L and cash flow, and very good example there for the best because they'll get you the cheapest rate. But that, from my experience, is not modern business. I just think, especially if you're at an early stage and you haven't got that, it's very hard for you to know those things. So ultimately, that's where I think alternative finance is a bit more up to date with what they need. I mean, we're talking to invoice factoring businesses here that obviously have a really, really good use case for a very specific thing, which is a huge pain for a lot of people paying invoices. With us, it's just to be as flexible as possible. It's not just invoices, it's supplier might let you down for something else. You might want to take advantage of a big bulk purchase. Ultimately, these are things that crop up. They're not in a business plan that you rigidly stick to for 5 years. So yeah, that's where we try and I think do something new that I would argue is more for the modern business as opposed to the traditional lending businesses for traditional businesses.
Just obviously, as a chief risk officer, I'd imagine this is pretty close to you, but is there things you've designed in the application process or challenging the business owner, whether it's around forecasting, to kind of make them aware of what the expected costs could be, and have they got a comfort understanding of that? Is because that's something you have in the process. Just curious to dig into that a little bit.
Yeah, I think there is a really big flaw in the alternative market. We have a lot of competing products. Some of them are quite complicated. Revenue-based finance is a great example. It's hard for even professionals to understand. You really need a spreadsheet and some calculations with around through cost of these things, and the varies. The fact that we're successful is even more expensive than if we're not successful. Sometimes there's diverse realities involved here that's hard to understand. I would think our market, product visibility and understanding trust in the genuine space. I think a standardized APR that's really needed. I think it should all be up. We are simply very upfront with that. Plus, we go through the process to actually reinforce that. It's quite clearly documented. It's not a quantitative calculation. We have basically an APR, it's our calculation, so we can compare. But there are a lot of people in the market who call flat rate, all sensitivity rates and that, but they're not the same. So I think if we want to build trust and understanding the products in our space, single, definable, understandably, the central figure, the cost is really for. Yes, it's definitely higher than back rates, but for very valid reasons. Of course, we're doing all the customs usually. We're often on top of bank lending, so thanks to stop their appetite ends at a certain level. We go a lot further than that. Again, it's a value proposition for the business. Want to grow a certain speed with bank money, if I want to grow faster with other parties, even better. They still make on that. Still go faster. Business owners, entrepreneurs, this is a value product to your account. In terms of like going through the process, so it's a key part for most to understand the terms of our products. We really offer two. One is basically as an invoice-related finance. You have sold to a business affiliate, have an invoice for finance. That's our main product is the sort of live finance. That's what we want to get that run with. I think is a deeply underserved product still even today. So you've got a business, you've got an idea, you just need to buy the grids and sell them to the customers who can already identify it. That is a key block that so many businesses. That's if I for the solve. Second, building that awareness of what these products are, how to standardize them, online standardize it, make sure honestly is for helping people understand the first asset.
Super familiar. Yeah, similar, Gashi, on your side. I know with your product, it is high utilization, sure you're regularly uploading invoices. So it's how is the product designed to give customers awareness of managing the cost, understanding what it is they're kind of using as a facility?
From the initial design of the product, our principle was always keep it simple and fair for the customer. And what is the most fair way in our mind? And we're coming from consumer lending ourselves, which is an extremely regulated space, especially in this regard. It's basically you only pay for what you use, and you have calculators where you can see, and for every drawdown, it's very clear what is the daily rate. So we charge a daily rate, and you only pay for it for the amount you advance for the days you use. And you see it for every invoice offer, what is the cost going to be, and what state is, and etc. So it's all upfront, and the customer even before signing up, there are calculators where they can calculate these things. And I agree, and I think that one of the key things when people go for alternative financing, always try to understand the real cost of borrowing. And it is sometimes it requires like the master's degree to understand. It is because they are engineered to be like some companies engineer the pricing to be complicated, so it's not exactly compare. So I think following, I think platforms like Swoop can take that role to educate customers different types of products and what is the value they can create, how they can compare various clients.
Scott, you talked a bit at the start about the strength of the alternative finance market in the UK, and it is nice to hear from millions. So definitely agree with that. Like it's amazing as a business owner as you kind of dig under the surface and see just how many options you have, and it's all been done in a relatively short space of time. So I'm kind of curious, starting Sal, just to understand, just to hear your thoughts on. How do you think it's going to change over the next 5 years in terms of the alternative finance market, or even how banks are serving SMEs going forward? Tough question.
I mean, the growth of the market is enough to make anyone sit up and take notice, I would say. It's funny you mentioned the banks there, because I guess one way that might go is that banks might look to buy some of these alternative lenders and put that into their own products. There is a good example of where I think an industry that's maybe 5 years ahead of this and where it can manage and actually consumer banking. A good example of that is Revolut and Monzo and Starling came onto the scene in about 15 years ago, creating an app. And all the banks were like, nah, no one's going to use an app to bank. And so now we sit here 15 minutes later and every single one of you will have a banking app on your phone. none of those three got bought, but they took up an enormous amount of market share out of the bank in the meantime. And I read articles about Revolut and Monzo IPOs every week now. So maybe that will be what happens in 5 years' time. I genuinely think banks will be looking at this going, oh, hang on, how are some of these larger alternative lenders making quite a lot of money off a customer segment we used to massively own? They'll either buy us or they won't be able to compete with us if you'll start seeing IPOs, etc. But I'm super confident in the growth of the space. I think that's one thing I want to bring across because, like I said, and to reiterate a point I made earlier, the old and where you see most kind of loans and financing across the world is just not built for the modern business. It's just not built for the modern business. Technology has caught up to the extent that the modern business can be accepting money and getting lent money for shorter periods of time, for more emergencies, quicker, faster.
Well, I just one thing that is just kind of triggered in my head as we were talking there that I'd be interested in is, like, yeah, absolutely what you're saying is true, and no better example than yourselves in terms of your financials and what's happened with the Iwaka. But you don't have to look very far to other countries where it hasn't gone so hot up. I think about the US, the Blue Vine, Cabbage, if I look at Funding Circle, in Spain, in Germany, in Poland, didn't go too hot. So why is it that it's working in the UK and not necessarily as well in other markets?
Well, I'd like you guys to answer this as well, but I think my thing is actually that's the risk, right? Is that none of us end up making a lot of money off a risky customer segment. And that's just something that we need to overcome because you're right, that's exactly what happened in the US. Lots of acquisitions off the back of businesses not quite being able to turn out next step. But hopefully you have as much confidence as we do.
Certainly from my side, yes, absolutely, and even from a risk perspective, I think we look around some of the failed cases and they seem quite obvious to me. People expand very rapidly, people are too aggressive. There are a number of alternative lenders exiting the market today, not because they didn't have the product or there wasn't a need, but actually they took too much risk and underpriced things. That's reality. Those are something about the markets. So risk trade will play an active role in consolidation. Certainly in the next few years, I think we'll see a greater sense of consolidation. Banks, I think, will make some inroads, but the main headaches they have is the products, because it really doesn't match the speed. I think they're improving, but they're never going to be as fast. And specialized understanding, I don't think they're that interested in, to be honest. So again, I really see a world where alternative lending isn't just on the curiosity. This is a mainstay of the SME lending market. In fact, it will be the key driver of this. So I see that for sure. The other part, I think, is definitely going to define the space and separate themselves even further from banks, is that the nature of alternative lending is very data-orientated. We're very looking for reasons to lend, not reasons, and this is from the chief risk officer, right? Looking at reasons to say yes. So we're looking for information. We want to understand. So if you're confident, we should be confident. Right? How can we get put together the same hardware? So what we see more and more is creeping out outside of lending. We're already developing a tech stack of analytics, insights we share with customers. We have them already developed for ourselves. You have the credit perspective to make decisions. Why not share them back with customers? We see a lot of clients, we don't really have a good sense what the management information is. Did I make a profit last month? Did I make a profit 3 months ago? I have to go and ask my accountants. That's killing business. How do you keep in touch? Help really drive the business if you don't know what's going on. So we have all this information. We can generate it in a format for our business owners to understand and make actionable insights out of it. Those with these invoicing, there's a whole range of these good alternative lenders get into beyond lend, become an alternative business partner. Again, you mentioned the likes of Revolut, where we can drift outside of their full space and see how by their door. I think it'll be a similar trajectory with alternative lending until we've not alternative any, either we're just SME specialist lenders, and that's the end of the story.
But if I'm going to dovetail slightly on the question that interests you to think about future, but you mentioned about finance earlier on, and obviously we've mentioned Revolut, we've mentioned Monzo, others are starting obviously seem to have no real appetite to do SME lending anymore. Tide have taken an approach of having a diversified pool of alternative lenders within their product. Revolut are taking the approach of building your own credit products, and Monzo are moving away from the Tide into the Revolut approach of doing it by themselves. How do you see alternative finance and banks working together? Do you think they're all going to go do it themselves, or are they going to take a more embedded approach?
So let me start with what makes it communicated successful in this space. And like Justin said, we try to create a very simple product in the front end, but in the back there's quite complicated analytics going on. It's very difficult to assess small business risk and correctly and that have right pricing and you have funding costs and etc. So, and on the bank side, so we need to do about banks' priorities, right? So if they have corporate bank, commercial customers, consumer customers, on the consumer side, they're trying to hook in the Revolut and Mozos. There's a lot of money going there. So, and they kind of manage themselves to automate that space. So they prefer that. On the human-powered service models, from one person, they get a lot more if they serve commercial and corporate. Because they take for them to invest a lot into in the funds and space. So, I think
Yeah, it was more just seeing if you saw the trend in terms of challenge to banks or banks taking a better finance approach or trying to do it all
okay,
themselves.
so now I remember. I think why some of the banks may not have figured it out is yet because they may not have figured out how to do this assessment very well. And you may see in their portfolios that this has really increased, so they were told by their investors to pass on and etc. How do we work with banks? I'm sure it's similar for you guys. One of the ways we work is they fund us, right? Through us, they go to the market. I think it's quite complicated, coming also from a bank myself, for a bank to acquire an alternative lender and use them to end, because what they do is they choke it and kill it. The reason is because of their risk policies, compliance policies, and integrating it into their legacy systems is so complicated, so it ends up dying. So that's why, like, for example, when big banks want to work with us, but they just take our technology and go to market with it, we say, no, it won't work, because we need to have the resources, the intelligence behind. So please, that decisioning. What you can do is fund us, and then do that develop. And the other thing we're trying to do is, they can offer us direct with their customers. Everybody's trying to become a marketplace like you are. So, I have the customers, why don't I,
No, I was just going to say, Monzo's approach, you're right, they're doing their own lending. They've got a hybrid one, so actually we're a key partner of Monzo. So if you apply for a loan on Monzo, there's actually a decent chance it'll be an IWOPA. But they're the only one of the ones you mentioned that we're partnered with, and I think the only one doing a partner model.
Yeah. So it's fascinating to see how they go. Just to wrap up, kind of just some of the kind of practical tips. If I am a business owner and I do want to look at alternative finance, did talk about how easy it affects you guys, but you always need to be kind of finance ready. So if you are looking to get access to any products of what they need to have, how to find to be in positions to be to quickly assess for such, so we get some practical tips. I don't know, Gotcha, if you want to start first.
Practical tips, I think it's a little bit of shopping around to see what is it that you really need. Do you need something short term and your cash flow, or do you need something that needs to be there, so when you need it you can dip in and out? So it's something you're flexible, or if you want to do a big payout but you need actually an upfront loan. So do we understand what you need and shop around after it?
Justin, if I were like a trade facility, what would I need to be?
Yeah, well, just knock on our door, really. But what makes things easier, I guess, in a lot of cases, is to be organized and fast. And so obviously all funders are looking for a clear snapshot of our business and really understand what years. As we hear a lot of comments about the orientations here, coming with recent settled accounts, so they don't need to be super fancy for on the registered account to get them to your interest-based levels. It's usually by bank connections, over loss accounting connections, operating W0 or UV packages. I think these very fix to tell those things that get foot visible. Those connections are really powerful, giving lenders the sort of understanding and need to have the confidence. I mean, it's a product. Talk a little bit about bank lending, how it's implemented. It's a section 40 for clients. This really is a product, not necessarily replacing bank clients. It's really hard replacing equity clients. So it needs to be quite organized. You wouldn't walk into a pitch through with an equity investor without the nature of the issue. It's not even a sure alternative. So yeah, really financial information support. A clear sense of what you want to use the money for. And I guess have a vision about relationships. Now, this isn't transaction. Most lenders and trade, definitely especially, we are interested in partnerships and relationships. So we want to help businesses. Doesn't mean if you have a need today for £500,000, yeah, but actually 100,000 is enough. And be aware of that. Feel free to communicate that. It doesn't mean we're only going to pick your how it starts. Everyone have got too hard. We want to keep the customers grow. We not growing our facilities. We're very keen to support and grow together with that happen. So having a journey is fine. Don't worry about the end game. The starting game is important.
Scott?
Yeah, I think I speak for all of us when I say that in every case it's just so easy to apply with open banking. The way in which we're set up in this country is just amazingly easy to apply and get an offer. I think the tough thing is understanding what the right offer and decision is for you. I'm going to give maybe a slightly different piece of advice, which is complimentary, but you might not have heard this. Like, I would definitely, every business owner might need funding and might get to the moment they need funding, but it takes a lot of skill to, I think, recognize that, take a step back and go, right, what kind of funding, but also, and I think there's a real crucial thing that I see no business owner consider, which is how much of my time is it going to take me to get that money? Particularly when you're a small business, your time is incredibly important. And part of the reason I mentioned this at the beginning, why I kind of exited the equity world and moved into the alternative lending world, is that was the thing that I was seeing kill businesses. To do an equity route, I'll say it, and it's controversial for me to say it here, if you get offered an amount of equity right now versus an amount of debt, I'd take the equity. But no one considers how long and how hard it is for you to convince somebody to part with that money in exchange for a percentage of your company. I saw founders take 12 months trying to raise 100 grand, and genuinely you can get 100 grand in 24 hours on that one girl. And yes, fine, it might be more expensive and you have to pay it back, but ultimately you've saved yourself 364 days of time that you otherwise would have had to think about it. And I don't know, that's probably something I don't hear much of, but I genuinely think is a consideration that you should take as well.
It's a huge consideration, and I think the other aspect of it is the percentage chances. So if 100 founders go in and they want to go for the equity option, 100 founders went in and want to go for the alternative finance option, I hazard a guess to say one founder is getting the equity option 364 days later. Probably upper 50 plus percentile are getting the alternative finance option within a 1 to 10 day rate. So I think that's a pretty crucial point to get.
Yeah, and everyone talks about, with equity, everyone talks about how it's like you're taking a percentage of your business away. Like, that's the main thing. I mean, I don't know, like, everyone might consider that's the main thing, but for me, like, you know, it really, really wasn't from my experience. The main thing is the time and ease, and how much time you are spending doing what you need to do to get the money that you need to grow your business. And that's the thing that nobody talks about for reasons I still can't understand.
Yeah, I think that's probably good just to lead as a thing to lead with business owners, because everyone's sometimes so obsessed with equity financing that they don't realize alternative finance exists. And alternative finance exists for businesses at early stages. They don't have the hottest financials. They may not be in a profitable stage yet, but facilities can be used. And in a weird way, you can make yourself way more attractive to an equity investor, because what you're doing is you're using that capital to grow your business in a timely manner, to gain customer share, to put stocks, to be able to purchase stocks, grow technology. So that awareness is super, super important. We're also conscious of kind of overstepped our time here, so thank you all for being so attentive and coming along today, and hopefully if you do have any other questions, our lovely panelists will be here to answer any other ones. So thanks so much, guys.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry, we'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.